Today I wanted to go through some elements that you should consider when choosing your business structure. Choosing a business structure is usually about compromise and looking into a crystal ball. It's really difficult to find the perfect fit or to find the perfect business structure, and often there's competing interests at stake. So it's really important that this is understood and that we understand that it's difficult to get the perfect structure, as I've said. And often as well, looking into that crystal ball, we really need to start with the end in mind. So it's not just about what's the structure look like now, and what is my business entity, for example, going to look like, my business going to look like right now. It's also important to think about what it's going to look like in 5 years, 10 years time, however long you're going to have it for, and who then you may be selling the business entity to or the assets to, and how they're going to be sold. So it's important to be thinking with that end in mind. And the other main factor also is a business structure already dictated by an industry body that you belong to, or do customers and suppliers demand a particular type of structure that they want to deal with? So often there may be a business structure that suits you better, but there's competing factors that simply your industry body says that this is the structure you need to have. So anyway, we're going to look at 5 areas here that you should consider. They're not complete. It's just a guide. It's fairly top level. We always encourage you to seek professional advice when choosing a business structure. This is a thought-provoking video. There's an ebook that's downloadable in the notes to this video, so I encourage you to download the ebook and use this as a bit of a guide or a starting point of considerations when looking at a business structure. So first one I've got up here is asset protection, and quite simply, asset protection is usually achieved via ownership and risk separation. So that could be the ownership separation between passive assets and income producing assets. And if you're married or in some sort of marital partnership, that's usually one member of the partnership may be taking on the passive assets, the other may be taking on the business and the risk. So it's important to have a think about that. And then also risk separation, which drives to that as well. You're separating your risk between risky business ventures and non-risky business ventures. This may be difficult to achieve, and it's it's usually perfect world discussions, but it's really important in my view for the first stop to be asset protection. The next one's ownership and control, and this here is a little bit about the now, but also into the future. And the now looks like, what's the structure and ownership going to look like at the moment? But does the structure need to allow for owners or new owners to come in that are unrelated to you perhaps in the future? And that might be 1, 2, 5, 10 years down the track. So if the structure needs to allow for that, then that may dictate or be an overriding factor in choosing the structure. So it's important to understand that, because often changing structures midstream, it is possible. And when I say changing structures, it may be that you start in a family trust and then you move into a company in 5 years' time because you've got your business has changed and evolved, you want to bring new owners in, etc. But that can be costly. It can be doable, but it can be costly, and it may not at that point be the perfect structure for you. Whereas if you had to set it up to start with, it may have been a lot better. So ownership and control is really important. Does the structure also need to allow for the separation between control and ownership? Can they be separate? Next thing we look at is income tax planning. Now you may think that's the first thing, but often that's not one of the first things we look at. It's as we've gone through asset protection and ownership and control. So income tax planning, it's trying to project what the likely income of the business is going to be, and what the likely profits are going to be, and what the tax rate will be, what your family, your family and extended family look like in terms of perhaps where potential profits can be distributed or sent to. Are there other business entities or structures within your group that can be linked into this structure? And often with income tax planning, it needs to tie in. Like I said before, there's competing interests. So often, what may be best for income tax planning may not suit asset protection, and you may put more weight into the asset protection side of choosing a business structure. So you go with a structure that's not as good for income tax planning, but it's going to give you a better a better level of income tax planning, better level of asset protection, for example, or it may allow for future ownership changes, which doesn't tie in that well with income tax planning. But it's a very, very important element to consider. Our next one we look at is capital gains tax planning, and this really is starting with the end in mind. So will you need to be bringing in equity partners at some stage, and who will you likely sell to? And it's also important to consider what it is that you're going to be selling. So is it likely that you're going to be selling just the goodwill and the assets that support the business out of a business entity to someone else, or is it likely that you're going to be selling the whole entity? So that raises different questions, it raises different options. So it's really important to think about capital gains tax now before you set up, rather than just when it's about time to sell. And that, like I said, can be a bit counterintuitive, but it's just a consideration that needs to be worked through. And the last item we've got here is the costs, and that's the cost associated with setting up the entity. It's the cost associated with running, or I guess administering the entity, and the ease with which you can do that. And then it's also likely winding up costs. So I hope you've enjoyed this. Encourage you to download the ebook that's in the notes, and by no means is this a complete guide. It really needs to be applied to your particular circumstances. So I encourage you to seek professional advice, either through us or through somebody else that's able to give that advice. I hope you've enjoyed the video. Thank you.